Perfect. So yeah, I spoke with one of our VIP clients about a week ago, and they asked me if I could go through a comparison of Canadian National Railway and Canadian Pacific Kansas City Railway. So I told them that once that I was back from my holidays, it would be first on my plate. So here we go. So I'm sure most are familiar, but CNR, they engage in the rail and related transportation business and operates a network of 20,000 miles of track and 23 terminals spanning Canada and the United States. It's currently trading at a price of about $131.40, a market cap of about $81 billion, and a dividend yield of 2.7%. Now, CPKC, they own and operate a network of approximately 20,000 miles in Canada, the US, and Mexico. They currently trade at a price of about $105.40, a market cap of $97 billion, and a dividend yield of 0.8%. Now, here's what CPKC's track network looks like, spanning all the way down to Mexico. And here is what CN's railway network looks like, just if you're curious and actually want to see the map in front of you. But the last time I did a segment comparing the two was in late 2022, and this was following the big news that CP had officially acquired Kansas City Southern for US $31 billion. And as a reminder, CP had initially bid on KCS in the spring of 2021 for US $29 billion, with CN issuing its own bid of about US $34 billion just 1 month later. But the deal was blocked by the U.S. Surface Transportation Board, or STB, for anti-competitive reasons, which led to the final purchase going to CP for a few billion over its initial bid. And as you can see, since the deal went through, their performance has been relatively the same, up about 6%. If we zoom in, though, CNR has underperformed, down about 20% from the beginning of 2023, while CP is down at just half of 1%. And before I move on, I'll also note that CNR has continued to grow its dividend, while CP hasn't until its last dividend paid on June 27th of 2025. Plus, CN has provided a better dividend yield. So CN's laggard return would be offset to some degree. But let's dig into both and see why CNR has been underperforming relatively recently, and how both have been, just generally financially performing. So CN's last quarter was Q2 of 2025, ended June 30th of 2025, while CPKC's was Q1 of 2025, ended March 31st, 2025. So keep this in mind when we're looking at the numbers here. And also note that CPKC will report its Q2 results on July 30th, which is on Wednesday. So we can get a better like-for-like comparison after they report those results. This podcast will probably be posted on Tuesday, so it'll be the Wednesday that they come out with those. But we can see that CN's revenue per product line has been hit quite hard in Q2, with year-over-year revenue down across the board, except for grain and fertilizers. And if we go for a like-for-like basis, comparing CN's Q1 to CPKC's Q1. Although CN's Q1 was better than its Q2, CN's revenue by products continued to be softer than CPKC's, which, if we look at the financials over the last 8 quarters, we can see more robust revenue growth from CPKC, likely led by better geographic exposure across North America and the integration benefits of KCR. Now, CPKC's diluted EPS growth was also more robust, with CN's diluted EPS up 7% and 8% in Q2 and Q1 respectively, due primarily to lower fuel expenses and the elimination of that pesky carbon tax program, while diluted EPS from CPKC was up about 18% in Q1. But I will note here just that CPKC's free cash flow lagged that of CN's in Q1. Moving on to the company's fiscal year 2025 guidance, CN is guiding toward revenue ton miles, or RTM, which is calculated by multiplying the weight of cargo transported by distance traveled, to be up in the low single-digit range, while adjusted EPS is expected to be up in the mid single digit to high single digit range, which compares to its previous guidance, which was provided in January of 2025, of about 10 to 15% growth. So they revised that lower. And looking at CPKC, it is looking toward mid single digit RTM growth and adjusted EPS to be up 10 to 14%. So CPKC is looking at better growth. But again, this guidance was provided much earlier than CN's, given CPKC hasn't reported its Q2 results yet. So we'll see if there's a shift there when they do report on Wednesday. But before moving to the valuations, looking at the balance sheet, CN's is superior with a trailing net debt to EBITDA multiple of about 2.4 times, while CPKC's is around 3 times. And looking at the valuations, CPKC is trading at a premium across all metrics, likely given its better projected growth and potentially diversification. But following the release of its results, again on July 30th, we will see if they end up revising this growth lower, given similar headwinds which CN is seeing. And I'll also note that CN is trading at a historical discount on a trailing price to earnings basis, while CPKC is actually trading at a premium right now to its historical 10-year median. So to conclude, this is really a quick summary here, but just hitting the key points on what's going on. Geographically, CPKC is better diversified and has been producing better growth, which has led to its relative outperformance and higher valuation multiples. CN's balance sheet is superior with a lower trailing net debt to EBITDA figure. Now, from an income perspective, CN is likely the better dividend growth stock with a 2.7% dividend yield, while CPKC's is just 0.8%. And CN has been growing its dividend at a better pace, while CPKC's has been flat, with its last dividend being the first increase in 5 years. But CPKC's forward dividend payout ratio is just 19%, so they've got room for growth, while CN's forward dividend payout ratio is about 47%. Now, from an operating standpoint, I can understand why individuals are paying up for the growth of CPKC, but it does trade at a premium valuation to its historical multiple, while CN trades at a discount. But it will be interesting to review their results coming out, like I said, this Wednesday. And in my opinion, both do just generally face some headwinds in the current economic environment and uncertainty that's going on. CPKC has great room to grow its dividend, like I noted, and it's great to see that they recently increased it. But again, from an income perspective, CN is likely the better dividend growth stock. Just at the end of the day, I really think it's kind of a toss-up between the two, depending on what you're looking for. But hopefully this provides a solid comparison for investors on the pros and cons of each. If you have any questions on CPKC's Q2 results, which will be posted on Wednesday, feel free to comment them in, and I will personally respond to them if you have anything that you're curious about, or just you want to get kind of an opinion on the results. I'll give you a little comment there. That's it.
Excellent. Nice summary there. A good look at those two venerable old railways going forward.
Yeah, one thing that I'll say too is just it is interesting. Even just on my massive road trip to Lethbridge, just again seeing the Kansas City Rail cars or locomotives, I guess. All over. Essentially, clearly, CP has brought some up north of the border, obviously. But yeah, was definitely seeing that all around.